Welcome to Cycles TV. This session of the Market Cycles Report is intended exclusively to provide information and education to help individuals better understand cycles and the markets. However, this information is not to be construed as professional advice as to the buying and selling of securities. In no event does the host express any opinion with respect to, or make recommendations regarding, the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading. Buying or selling decisions are solely within the personal discretion of each individual. And now, enjoy the show. Here is your host.
Welcome to the Foundation for the Study of Cycles. My name is Lars. We have Monday, we have Halloween, we are live today. Let's look at the stock markets. So as we are live, I will pay attention to the chat and your questions at the end of this session. Yeah, as mentioned in the opening, let's talk about short-term cycles. So the rally we saw during the past 1-2 weeks, from a short-term perspective, have not been seen by the cycle analysis we did. So, if we use latest data, what do the cycles tell us? Is this a long-lasting start of a new bull market? Is this just a short-time rally which will come to an end shortly? What do the long-term and short-term cycles tell us? So that's the topic for today. Let's spend 15 to 20 minutes. I've prepared some charts with our cycle scanner. So I've just made snapshots to make it more concrete here in the session. But all charts shown here today are done with the members tool set we use here at the Foundation. Hi Bobby, hi Kachel. Good to see you joining this live. I will monitor the chat, so feel free to drop in your questions. Yeah. What weeks, but where's the rally? Where is the rally? Let's, if you just look at the FANG stocks, so the so famous Facebook, Amazon, Apple, Netflix, Google, just look at the left-hand side here. I mean, it was a very short-lived rally at all, if it has not already ended last week. So it really depends on how you look at the current markets to argue a rally, or even maybe this is a short blip and nothing more. And the famous digital large cap companies are ahead of the more classical traditional economy. So we don't know, but I would hardly argue this has been a tradable rally at all. So it's really a matter of perspective how you argue here. But anyhow, so let's have a look at the cycles today. I've prepared some nice charts here with you. So therefore, let me quickly ensure that here we go into the correct ones here. Here. So let's start with the long-term view, and that's important. This is a cycle chart I showed here 1 year ago. Yes, that's true. 1 year ago. I told you from the long-term perspective, 16th October 2021, that the bull market will come to an end. At this point in time, it was a very bold move, but I will just repeat the cycle here. There have been 3 dominant long-term weekly cycles here, 381, 180 weeks, and 140 weeks. And we are more or less in the middle of this long-term cycle. So what's important is we need to check, or we need to update this cycle. So this is just a zoom in now to the longer-term 180-day cycle and 381-day cycle. And you see the dark blue, the dark blue line here is out of sample. So that's exactly the point in time when this projection was done. And I remember I had hard times here in November, December last year that this forecast might be wrong. But you see what happened afterwards. This long-term cycle forecast is, I call it, it's more running on rails. The markets since October last year are running on rails. And that's why I not deviate from this long-term perspective here. And even this short-term rally we saw here, I'm even hard for me to argue it's a rally here. What's more important is the bottoming area was projected back in October last year, not now. Let's say June 2023. So we need to update this cycle. This was the past behavior. I just want to show you how important always the long-term picture is. This is the same picture updated with today's data. So I can switch forth and back. This is cycle analysis done 1 year ago. This is the same long-term cycle analysis today with the latest data from Friday. And you might see here is there is no big change in the long-term projection here, so that we are right in the middle of this downswing here, or we have passed the midpoint of this projection here. So there's a long way to go before this long-term cycle will end. So I would be careful with any rally which might evolve. It will be short-lived. I think this is what you hear me often saying here from the cycles perspective. So the long-term picture, even using latest data, has not changed. Always take this into account. And even with the latest rally, and that's why you need to update your cycle analysis framework. Once you have new data here for within the last weeks now, or 2 weeks, we have this upswing here now. In addition to this data set, it could make the cycles change if you include this in your analysis. So it's not said that this projection will stay static, as it looks like, static, moving forth and back, no change here. But you might have also the situation, the cycles analysis might change with new data, but it didn't. So that's why I said I would stick to this long-term analysis. It's still valid even with latest data. So now let's switch to the more short-term picture, because that's why we are here today. I mean, the long-term analysis is not new. And I will use S&P, the S&P 500 for sure. But first, let's look at Apple. I think it's a proxy in general due to the market cap of Apple. It's a mixture of a large traded stock. However, it's these digital very large stocks here, so it could use as a trigger the S&P larger index and then the volatility index based on sentiment. And talking about short term, I will use daily data now for this analysis. Let's start with Apple, and let's start with analysis I shared here back in, I can't remember, but it was August. I want you here at this point in time. You can go back in our cycles TV sessions here. This analysis was done. You see the date here. End of August. 26th of August was this analysis done, and it was shown here on the channel. And I told you that I would expect now a top here in Apple and at least a down move into end of the year. The light blue is what happened after the fact. And I show you this analysis because there's always something to learn in cycle analysis. And that's the key now. You should also repeat this analysis. What you see here, we saw the rally here during the last week, which we can also see here in the light blue data. And we see here in the composite cycle projection we did here back in August, that the cycle paused and made a sideways moves before the drop then continues beginning of November somewhere here. So in this period, or this is the sum of these 3 cycles here. And one cycle was still moving down, and there was a short-term cycle which has been pointed up, but the amplitude was not large enough to make it an up move. But you see that the down move should have paused during this period here. And that's more or less exactly the point in time where the rally started here. And just based on this analysis, you never know how strong these cycles are. And these cycle composites are only used for timing, not for price projections here. So I would say it's still valid as we are moving down here. This sideways move here was a smaller cycle which caused the longer cycle to pause here. But that's just the interpretation. Now, if you make the same analysis today with this data, and this is what I will do now, the question is, does the picture has changed? So does it mean now we might see a strong up move continuing into year end, or maybe a different picture? So this is what I said. Once you add more data to the analysis, it could reveal changed cycles here. So this is what I did Friday, the weekend. Let's use Apple with latest data. So this was August. This is now end of October. So 2 months later, daily data. This is how it looked now in Apple. And you can switch forth and back. And even if you review the video, you can move forth and back, I think. The 3 cycles used here are more or less the same. That's now interesting to learn something on the principle of variation of cycles. So cycles are never static in regards to length, amplitude, and phase. What you see here above is the length. So 79 days, 135 days, 172 days right now. So this is the current length using Friday's close. If I switch back, so we have 80, 130, 170. It's here 81, 136, 176, 2 months ago. So you see that the length has slightly changed, but only slightly. I would count the nominal cycles are still the same. So switching here from 81 to 79, it's really not a big change. Switching from 136 to 165, and the longer term 176 to 172. So here you can see that, yes, we have a slight change in these length here, but all 3 cycles are still there. You see also the overall picture does not change very large, but you see now that also the amplitude of these 3 cycles has changed, which now results in this different picture here. So instead of seeing this flat sideways move here, which we had here, now based on latest data, we see, okay, the amplitude is much stronger than anticipated, which we now knew based on the price movements here. And you see what this projection now tells us here. I can even make it a little bit larger because that's the current situation. So what I would say very interesting is the overall picture has not changed on the short-term perspective. Yeah. So even though we saw that there is a change in trend expected here, so just moving back. So it was an expected change in trend, at least the downtrend to be stopped here at this point in time. We are not aware of if there would be a strong uptrend or just a sideways move. Now, I mean, we have the clue, but, and that's the important topic here, the overall picture doesn't change in regards to there's not a stronger, longer term upcycle here. No, it's not. It's still the same longer term downtrend cycle, which is still projecting the more important low to count on in regards to end of the year. Yeah, and this is a perfect example. I just switch back and forth how you see the principle of variation in Apple. And the reason I also do this day by day, week by week, because it also could happen that we could see a complete different picture of the cycle. Say, okay, is it now a start of a new bull market? Then you would see a longer term daily cycle also pointing upwards. But it's not. Yeah, and that's the message I would at least bring across here. So the exact top of this cycle here, I don't would count it too exact here. As I said, cycles will vary, but it's the 10th of November. So and we are close to topping here anyhow. So from now until end of the week, I would say it's over. This rally has maybe a small leg to go, but anyhow hard to trade. I mean, these kind of rallies and this market conditions are more or less not tradable at all, at least if you want to go long on the markets. But so therefore, no change in the perspective, just looking at Apple. But let's switch through some other charts here. Always important, you know that I'm always referring to the volatility index, which is a great correlation to market movements. You know, you need to read it vice versa. So lows in the volatility index will correspond to market tops. Yeah. So while high volatility readings here also often correspond to market bottoms or short-term bottoms here. And you see, this is the composite cycle projection now, just used based on the 4 dominant cycles here in the volatility index. You can see here, which nicely is, it's a short-term projection. So therefore, I used the combination of different cycles here to see what the picture will show us now. And to be honest, on the short-term picture, yeah, we saw that there was a topping here in mid-September, which in the volatility index, and this is showing the volatility index might fall, now in the final stage here, so latest by end of this week here, which means this is the rally leg here in the markets, which should also then closely come to an end, but then more or less all of these 4 cycles are projecting an upswing here in the volatility index moving into early next year. So here's one spike and another spike here. Maybe this could guide us a little bit through what will happen now. So confirming what we have seen in Apple just before. So Apple still rolling over into end of the year. Now volatility also rolling over and will get higher into end of the year, even next year. So same picture here. I mean, we've not seen this coming, Ollie, to be honest. Otherwise, I would have showed it you here on the channel. We haven't. So this cycle lag was really not anticipated. That's what I really need to say. So last but not least, let's look at the broader markets, the S&P 500 daily cycles. Now we started with a weekly perspective on the S&P. So set this into context of the longer term cycle. You see here all the rally attempts. So this was the first rally here, stopped by this cycle peak here. Then here moving into this bottoming area, then another cycle peak here, stop this rally here. And now we are approaching the third leg here. So it's very interesting. So you see here the 1, 2, 3. And if you have a close look at the projected date here, and that's interesting for me now, all 3 cycle short-term projections I shared here with you, Apple, Volatility Index, S&P, count more or less that this week, this up leg will end. Or at least by end of the week, 10th November. Or we are in the final stage, however you read the cycles here. So this has passed already the major upswing here. So you could argue you are on the topping area, are now rolling over. And the projection here is, moving down into February next year. So at least now first starting into end of this year. So the first leg, this is what we had in Apple here. So we should pay close attention at the end of the year, or here, let's say end of November, beginning of December. Exactly here. We saw what happened to Apple at this point in time with new data. But at least this leg is now rolling over this week, moving strongly down into end of November, beginning December. And then we need to have a close view what this might tell us here, and then even a down leg continuing into early next year on the S&P. So that's what I said. If you review this short-term picture, we will come to the conclusion that we didn't anticipate this strong rally, but you could also argue, as I made in the beginning, what rally you're talking about. If you just look at the FANG stock, but I agree. If you look at the Dow Jones index, there's a very strong rally. But anyhow, analyzing this rally now does not change my short-term perspective that this would be a rally I would count on moving forward. From a timing perspective, at least after the 10th of November, also all short-term cycles, now updated based on latest data, so updated based on the current leg we have seen now on the market, it should not continue longer than until the 10th of November. And then if both cycles come into time alignment, again, downward, that's then where the next powerful move should unfold according to cycles. That's the pure cyclic perspective looking at the markets. What's always interesting, and from time to time I add this here also in the channel, is that we can use also our cycle analysis work, put it on the technical chart, technical analysis, and even make technical analysis more valuable in regards to the indicators and the outcome. And therefore, I think I've shared also in the last 2 weeks this chart here, so that we also need to look an eye now on the technical conditions. Let me quickly browse or just open some charts here again. Give me a second. Right screen. Okay. Some technicals. Yeah, I shared this, I'm sure, last week here. And it's a very interesting chart now to add. Because the technical indicators are more, let's say, the cycles give you the picture or the setup. Yeah. So what you're looking for. Now we are looking in the setup stage for the next short move, downward move. And that's the setup we have right now. We are not going long from a cyclic perspective. So now when is the next point in time pulling the trigger? Yeah, the setup is the cycle timing. Now we need to wait for the concrete trigger, and the trigger is more based on price, not time. And therefore, this chart I revealed last week here, and based on an analysis, I think last week, but if not, let me repeat it here. I think Friday last week, I called the springboard data. But because what's interesting from a technical cyclic behavior in the markets here, the percentage of change between stocks and bonds. There is a very interesting relationship, at least since end of last year. So since the start of the downward move here, so since the market structure has changed, we see that bonds and stocks move in sync. So both in general have moved down. And when bonds also moved up, stocks also, based on the inflation and high interest rates, not going into the details, but at least we have a cyclic behavior between these two if they diverge from each other. So sometimes you will have a period when bonds continue to move down and stock starts to go into rally mode. So then they diverge from each other, and this divergence needs to be closed every time. This is what this indicator shows you. So if we are at the zero line here in the center, both stocks and bonds move in the same direction in regards to the percentage change. So then everything is in sync. When it goes up here, so then there is a deviation that stocks rally much more than bonds, or bonds fall much more than stocks. So it's always the difference of percentage change stock minus percentage change bonds. And you see, once these deviation reach a maximum, so across the upper levels here of this band indicated by these red lines here, this indicated a top in the stock markets here. I mean, even here the smaller one, but let's have a look at the more larger ones here. This stopped the rally we had here. So then the next big up move came here, which stopped this rally attempt here. And the next big up move was here, which stopped the last rally. And that's the interesting point. Since last week, Friday, a week ago, yeah, we have reached exactly this level here. That's why I highlighted. This is where I started to share this chart the first time here. So there I said we have the next time. So 1, 2, 3, 4. This is the 5th time, at least in this year, that the divergence between percentage change of stocks and bonds has reached a level which in the past always led to the situation that stocks have to come down again. Does not mean it must happen again, but at least a very, very strong relationship here. And last but not least, as I said, we know the cycles in the markets. We know the cycles we have seen in the VIX, the volatility index. There is a cyclic behavior between the behavior of bonds and stocks since end of last year. And I've shown this here as a theoretical cycle of around 50 trading days, which is equal to 70 calendar days. Yeah, you see how more or less clearly this cycle resolves also in this cyclic picture. And you see where we arrive right now. Same projection as we had on the Apple volatility and the S&P cycle here. So there's a 50-day trading day cycle between the divergence between bonds changes and stocks changes here. And you see the current situation we have right now. So I'm very carefully here looking at more way for stocks to rally to resolve these high divergence here. Also because the cycles here. And then that's a momentum indicator optimized by using a little bit cyclic behavior. You see that always the momentum reached a high level or an overbought momentum level here, reading from this indicator, which is in sync with the deviation signal here at the upper lines, or at least you see here a divergence reading this technical indicator. And we have the same situation now today also with the momentum in the market. So that's highly overbought. So all these three, the cycle, the cyclic behavior between change of stocks and bonds, and the cyclic momentum comes to the technical situation. I think the chart speaks for itself. So I don't know what will happen. This is by no means any recommendation here, but at least for me, looking at these cyclic charts, long-term perspective, short-term perspective, all three even, and that's always, please keep this in mind, updating my analysis, which I did 2 months ago, shared here on Apple, I showed you. Inspecting the changes. How was the picture 2 months ago? How is the picture today? Do I have a more or less stable picture with slightly changed cycle length, amplitude, phase? Which would be good, because then I can stick to it and maybe explain a little bit better what happened. Or do I get a complete different picture today instead what I had 2 months ago, which is not good, because then you cannot trust the cyclic model as it is more or less moving around, maybe due to too much noise, or it cannot detect cycles right now. But that's not the case. I've explained it based on Apple. We've seen it now in the S&P 500 and the volatility index, and then moving to the technical situation to see it if you get a trigger. We have the setup, we have validated past analysis, today's analysis, how did it change, what's the difference in past and today's cycle analysis, and now waiting for the trigger on the technical chart. I've showed you just one example. That's it for today. I think a lot of content for learning perspective, because as I said, we didn't saw this rally coming. We maybe would have seen if we just analyzed the 3 cycles in Apple individually, not as a composite, because the composite just moved flat. But there was then, on a smaller amplitude cycle, there was an upswing, which was then more the dominant one during the last week. But you never know before, if you use composite models, which cycle will overrule the other. That's also a holy grail in cycle analysis. But as said, lot of in the current markets to learn from, to get back to cycle analysis. And I think, at least for me, there's still a clear picture in the cycle analysis out there. Okay, that's it for today. I think enough to digest. Move back, move forward. Please review this session here. I would not be able, I see your question here, happy motoring, looking at Tesla, because I don't have the software open. I just showed you the charts I did on the weekends. But to be honest, I offer you next session to have maybe more throw in your wishes, and then I will have more a concrete session to what you want to see. That's it. It looks like you're more listening to the session today, not so much question. So thanks, Christian. Thanks, Kachel, being here. That's the purpose. That's the reason I'm here. I want to help you a little bit learn something on cycle analysis while doing this live. So this is one way doing cycle analysis. For sure, there are also different perspectives, different ways, other ways to apply cycles on markets. This is one special way. You can repeat this analysis with our toolset at the foundation. It's based on digital signal processing. Please like, subscribe. Let's meet here again next week, Monday, same place, same time. And now, happy Halloween. So let's go out, have some fun tonight. And then tomorrow we will see what the markets did today. Thank you. Bye. Enjoy your time.